Good morning, guys. What's going on? My name is Matt Pease. In this video, I'm gonna share with you how I made this dollar amount. I'll put it on the screen here. I don't remember it exactly to a T. Posted this live in the Discord. Later in this video, I'm gonna go through the exact strategy that I used to find this entry. This was a 7 risk to reward trade, meaning I'm risking 1 to make 7. These are the kinds of trades I recommend for most traders. They're fairly easy to find. And because your risk to reward is so large, you can have a very small win rate and still be a very profitable trader using this method. We'll jump into the charts in just a moment. So I had a YouTube comment a few weeks ago saying that my room looked broke and that's why they wouldn't take advice from me, because the room itself looked like a broke person's room, which didn't really make sense to me at the time. But turns out you were actually fucking right, because the ceiling is now caving in. Yeah, I don't know how this happened. Probably rats and shit up there. So yeah, you got me on that one.
Gang pull up deep, AMG and SRTs, and your bitch is a freak. She pull up, get straight on her knees. Yeah, that's your main squeeze. Buckley's I fuck her with ease. But that's another story. Let me sip my tea. Yeah.
Beautiful day here in Fort Lauderdale, Florida. Rand, what do you rate Fort Laud 1 through 10?
Give it a solid 8.
Solid 8? I was gonna say I'll give it a solid 7. I think it's good, a little bit overrated.
West side of 95 to 6, east side 7.
Okay, so here is how I was able to take a long position from literally right here. Posted this in advance inside the Pro Discord. I'll post a screenshot up on the screen here, and take profit literally at this high. Unfortunately, I didn't get into the short position here because Blowfin, for some reason, didn't hit the 65K, but all other exchanges did. It happens sometimes. It is what it is. But I was also looking for a short from right here. But mainly, I want to talk about finding this long position, how I was able to get into this trade, and how you can replicate it for yourself. This was a weekend trade. So normally I don't like to trade weekends. It's just way too volatile. Price action can be a little bit unpredictable. I don't like that. I'd rather trade over the week where price respects levels a little bit better and we don't get those random pump and dumps like we see during the weekend. But this trade was taken during Saturday night through Sunday day. So this was a weekend trade. This is not something I recommend, but it followed my rules. It was a pretty easy long position, right? The first thing we have to do is look at the daily bias, meaning what is price doing on a higher time frame? Well, I saw that we had reclaimed these range lows. We're kind of in this mid-range here. We're obviously not at a support level by any means. If anything, we are at a resistance level, but price action is looking bullish, right? We closed above this previous high, right? Creating a market structure shift. You can clearly see that, right? A candle close above this level with displacement, with a fair value gap that closed above that level. So to me, that tells me, longs are valid here, all right? I'm willing to take a long on a lower time frame if my confluences line up. Now, this was actually a 5-minute trade. So a lot of you guys talk about scalping. This is a scalp trade that I took, and we're gonna actually go into replay mode here, and I'll kind of explain my thoughts in real time, what I'm looking at. So again, we're making higher highs and higher lows. There's no denying that. And at this point, we're in this range, right? You can clearly see, price isn't really making higher highs or higher lows. It's kind of just ranging. Now, when you see price ranging like this, all this is doing is building liquidity, right? It's building buy side liquidity and it's building sell side liquidity, meaning you don't want to be taking any trades in this chop, right? In this chop price action, you don't want to be entering the market. You only want to be taking trades when either side is swept, right? So taking shorts right here or taking longs down here, right? That in simple is what trading a swing failure pattern or an SFB is, right? It's trading that buy side or sell side liquidity when retail gets stopped out, because you have to remember retail or the newbies, they are trading this, right? They're putting their stop loss below this swing low and they're putting their take profit or their stop loss if they're short above the swing high. So we want to enter when retail is getting stopped out. So you always have to think in terms of market makers, not in terms of retail. So again, we are in an uptrend. We are forming this range. So this is when I want to actually pull out my golden pocket fib. Now you guys know that I love the golden pocket fib. This is the 0.618 and the 0.65 fib levels. Now you want to use this in confluence with key levels. Now automatically, right? I just pulled my fib from the very recent swing low, which is right here, to the swing high. Again, I'm on the 5-minute time frame. I can already see confluences starting to line up here at this golden pocket, right? I have these major lows here, right? These major lows here. I also see we have these lows right here that have not been swept. So I already have a trade idea right off the bat. If price comes down to sweep these lows and tag into this golden pocket, I'm going to be looking for a long position. I can also see we have this fair value gap here as well, right, that we may fill, also retesting these highs. But really, I'm looking for price history, right? I'm looking for levels that price has already reacted from in the past, because there's a strong likelihood that if price comes back down to these levels, price is going to react once again, right? This to me is the main level that I'm eyeing, because I have multiple pieces of confluences lining up. You always want confluences when you're trading. People talk about, high win rate trading strategies. It comes down to the amount of confluences you have. The more confluences, the higher the probability the trade is going to be. So again, I always trade with the golden pocket. I always trade with key support or resistance levels, or levels with price history, or in this case, we just have some major lows here that I want to see being swept. And again, the reason that this is valid is because we are in an uptrend. It's because we are seeing displacement. We are seeing higher highs and higher lows. So I want to get in the market when it offers a discounted price in this uptrend. And also, this range here also validates my idea, because this is referred to as a sweeping pullback. So there are three types of pullback, right? You have the aggressive pullback, you have the corrective pullback, and then you have the sweeping pullback, which is actually a type of corrective pullback. I'll make another video on that in the future. But again, there's three types of pullbacks. You don't want to take a trade on an aggressive pullback, which would be like if price went straight up and straight down. You don't want to take a trade there. You want to take a trade on a corrective pullback, which is when price corrects down to that level, right? A soft correction down, or a sweeping pullback, which is when price kind of forms this range right above your entry level, and then you get kind of a sharp drop down into this level, and that's when you want to take that long position. So that's a little bit more advanced. No need to worry about that now. You don't have to know that to take trades like this. You really don't. So I've identified my key level. I have all the confluences met. Now I'm simply waiting for price to reach this level, right? Sweep this golden pocket. And ultimately, I want to see a reclaim of these lows for my long trigger, right? This is going to be my long trigger, and then my stop loss is going to be below those previous lows, and I'm simply going to be targeting the highs as my full take profit. So you can see this is around an 8 risk to reward. And this is something else I want to make very, very clear. Before I take any sort of trade, or before I post a setup in the Discord, I always mark out with the drawing tool on TradingView exactly what I want to see. This is very, very important. Like for me, I'm a visual learner. I need to literally see what my trade plan is before I enter the trade. This also stops me from FOMOing into trades if my plan is not followed. So I'll draw in advance, what I want to see. I'll have the entry, the stop loss, and the take profit. I'll draw this little line on the chart here of exactly what I want to see. And then I'm simply going to wait, right? Plan, patience, trigger. This is a phrase that I've made up inside of the pro community. I call it PPT, right? So plan, patience, trigger. You want to make a trading plan, have your trading plan. You want to wait for your trade idea to play out. And then 3, trigger. This is the hardest part, is actually executing the trade once your conditions are met. So something else I want to see on the chart as price approaches this level is I want to see some bullish divergences here on the 5-minute time frame, or at least see the oscillator in that oversold zone. So the indicator that I use for this is the Easy Oscillator. This is part of my pro community. So again, click the first link in the description below if you don't have access. This is a very, very strong confluence. It's one that I almost always look for before I enter a trade. So again, I want to see price sweep these lows, tag into that golden pocket, reclaim these lows, or even enter at the 618, which is in this case what I did. I literally entered right at the 618 with my stop loss below these lows. So this is literally a 10 risk to reward trade, right? Literally a 10 risk to reward trade, and my take profit is going to be at these highs. And we're going to see how price plays out, right? Again, it's weekend, so volume's a little low. Boom. Here we see that price had swept these lows. It just missed our golden pocket on Bitstamp. I'm charting on Bitstamp. Actually, if we go to the Blofin pair, which is an exchange that I use, it actually did tag right into the golden pocket, into the 618. But even still, you can go to a lower time frame. You can see that price is approaching this level. The oscillator is approaching that oversold zone, literally right here on this candle. Even go down to a 1 to 3 minute time frame. You can see price had swept that level. We're seeing some bullish divergences. So in this case, we want to wait for a retest of this level. Boom. Which was right here. So this was the retest of the level. The stop loss is going to go right below that swing low. And we want to target this major high as our take profit. So if we followed our rules to a T, right, sweep those lows, wait for the retrace into those lows. We can even draw the golden pocket on like a 1 minute time frame for that entry, right? Boom, right into that golden pocket. Testing those lows again. We can see clear displacement with fair value gap. Again, this is on the 1 minute time frame. I wouldn't recommend this. I'm just showing you, the most optimal entry. That is your trade idea. And this is literally a 14 risk to reward ratio trade, right? Literally a 14 risk to reward ratio trade. I think mine was, since I entered at the 618 on the Blowfin exchange, mine was around like an 8 or 9 risk to reward, I believe. And then we just want to let our thesis play out. Now, this trade should have been a lot more profitable than it was. I actually took a very small TP1 right here and moved my stops to break even, just because it is the weekend and I don't like to take gambles over the weekend. If this was during the week, I wouldn't take a partial TP at all. I would simply wait for my thesis to play out. But in this case, since it was over the weekend, I didn't really follow my rules, but then again, it is the weekend, so I don't want to take any chances. I took a small TP1 and moved my stop loss to break even. So really this trade should have been a lot more profitable than it was, but it was still a winning trade nonetheless. And I think in total, my risk to reward was like a 3 or 4, considering that I had that TP1 right around here. Now, I was using 50x leverage because it was on such a low time frame. Guys, leverage does not matter. It's all about the position size. So I know a lot of people talk about, what leverage should you use? It doesn't matter. It's about position size. It's about how much of your entire portfolio you're risking. In this case, since it was over the weekend, I risked 1% of my futures portfolio. So if I lost that, I wouldn't really notice. It wouldn't affect me mentally. But if I win the trade, it is something that I notice in my portfolio. It's a decent sized win. This is something that most traders mess up as well, is that they don't actually let their thesis play out. I hear all the time on YouTube, I hear all the time these gurus talking about, take profit 1 here, make the trade risk free. The issue with that is that if you don't let your thesis play out, you won't be profitable in the long run. Let me explain, right? If I were to have my rules all the time as, okay, we're gonna take profit 1 here, take profit 2 here, take profit 3 here, my win rate has to be like 70 to 80% for me to even be profitable. Because if you think about it, my risk to reward is like less than 1 if I'm taking partials all the way up, or maybe a 1 to 2 risk to reward after all my TPs are hit with all the partials. That's not how I like to trade, right? I like to go for the lower win percentage, right? I can have a 30% win rate. I can have a 40% win rate, which by the way, mine is much higher than that, around 60 to 7% on Blowfin. But I could have a 30 to 40% win rate and I would still be extremely profitable because I'm risking so little to make so much, right? Like in this case, it's a 1 to 10 risk to reward. So I'm risking, let's say you have $1,000. Let's say you're putting $100 in the trade. I'm risking $100 to make $1,000 in that trade. So I could lose 3, 4, 5, 6, 7, 8, 9 of those trades. And all I would need is 1 to make it back. Now, obviously, we don't want to have a 10% win rate, but this is just a textbook trade setup. I want to make this video for you guys. It's very easy to replicate. All you have to do is find the daily bias, decide whether you're in an uptrend or a downtrend, draw your local golden pocket, which is a 0.618 and 0.65, look for confluences with those swing lows or with a key level, then go to a lower time frame, look for bullish divergences as price is approaching that zone or the oscillator just oversold in general, and then look for a reclaim of that swing low for your trade entry, stop loss below swing low, and then you just target the range highs. So this is like the only correct way to trade a range. You want to wait for those moves outside of the range. That is where the liquidity lies, and that is how you take money from the newbies. And then again, we want to let our thesis play out. We don't want to take profit and get scared as price is going back down, right? We don't want to do that. We want to let our thesis play out. We have our take profit. It is at the range highs. Once our take profit is hit, then we're done, all right? But until then, there we go, full TP, right? Boom. And that was actually where I was looking for a short on Blowfin. But we don't micromanage the trade while we're in it, all right? We set our stop loss, we set our take profit, and we walk away. This is the way to do it. It's a psychological game. Very little of it has to do with actual strategy, and a lot of it has to do with your own mental fortitude, right? Actually sticking through with your thesis, right? Having conviction in your trade and not letting your emotions take over you. And this is the most difficult aspect of being a trader. And this is why so many traders fail, in my opinion, is because they haven't mastered this skill yet. And I don't even think anyone really masters it. It's just something that you have to learn how to deal with and how to cope with it. The more emotionless you get, the better of a trader you will be. I'll actually show you in real time another trade setup that I'm looking at. If we go to a slightly higher time frame now, we're still in bullish market structure. Like I said, we had closed above that swing high. So I'm still looking for longs on a slightly higher time frame here. So I'm going to go down to, let's say, like a 2 to 1 hour time frame. Look for the most recent swing low, which to me is somewhere around here. Draw my golden pocket once again. And I have another long idea already because I see we have price history at this level, right? This level was acting as resistance, right? Resistance, 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 resistance. We actually broke through this level with displacement. So now I'd be expecting a breakout and retest to where we can come back down to this level, to this golden pocket, look for bullish divergences as we approach that level, something like that. And this would be my long idea, again, going down to a lower time frame for entry. So in real time, another trade idea, and this is around a 4 risk to reward, depending on where we get in on a lower time frame, could be a lot higher. And we could even target these external liquidity points as our second and third take profits here. So again, you can see massive risk to reward. And this is, again, just using the teachings that I've showed you guys. So that's gonna be it for this video. I hope you guys have enjoyed. Again, it's just using the golden pocket fib in Confluence with key levels. Obviously, you need to understand market structure, going to a lower time frame for entry, finding those bullish divergences, and getting in the trade.